Hi, and happy Thanksgiving. I'm Dan with Pay Down Debt Solutions, and it is Thanksgiving Day. I think it's about 2:30 in the afternoon right now. I got an hour and a half before we're going to dinner. So if I go a little fast, I'm not really rushed, but in my head, I just cannot wait to get to hot turkey and cold beer. But let's look at this is an example. This is another non-paying client. Actually, he's become a friend. He used to work for me. He's not a kid anymore. He was a kid when he worked for me. He's a 24-year-old young man. He's an electrical journeyman. So he's an electrician as far as the state's concerned, but he's got to keep going to get his master's license so he can do this on his own full time if he chooses. So 3,908 is his monthly income. That is what is actually getting deposited because, well, how do I put it? He's got his bleep together because this is after he's got 401k matching. This is after he's already been saving for his retirement. And 24 years old, he has two and a half times the amount of money I saved. But I already had a girlfriend. And that's actually where our scenario comes from. Because I don't know about boyfriends, but I do know girlfriends cost money. Even good ones. Bad ones maybe more? I'm not sure. Anyway, he's buying his first house. And they haven't closed yet. That's mid-December he's closing. But right now his estimated mortgage is about $1,283 a month. He currently has a $354 credit card payment for a total of $11,718 in credit card debt. And he's at 0% cash flow. Now, for a single guy living alone, well, relatively single, he's had a girlfriend for a little while, zero cash flow. And you might think, what's he spending $2,271 a month? Well, he's 24 years old. He's going out on the weekends. He's going with his girlfriend. He likes to go camping. In the winter, they'll take snowmobile trips. All the fun stuff you do when you're 24, in love with no kids. He's got 4 older brothers, and I met them all, and because he lives just down the road. I met them all, and he's got an army of nieces and nephews, so he figures he's probably going to spend about $1,000 on Christmas. Now, most people, like you or I, typical people, let's call us, average, that 0% cash flow would be stressful. For him, it's not. He's an electrical journeyman. Half the time he answers his phone, mostly it's family members, because he's got not just his brothers, but he's got big family. They all need work done. So he's got constant side work available. But now with the girlfriend, he doesn't want to spend every minute of the day working like he's done for the last 2 years to get where he's at. Buying a house at 24 years old, living the dream. So for years, he's just done extra side jobs. I'll even throw him small side jobs. I get called from past customers, asking like, hey, I need this added. I need a generator plug added. Stuff one guy can do in just 2 or 3 hours as an electrician. So zero cash flow, he's never had to worry about. But now I keep going off on the tangent. He's got a girlfriend now. He wants to set something up to pay it down faster to save money. And then that way he doesn't have to rely on the side hustle, but it's an option. So let's look. He figures about $1,000. He's $11,718. Figures about $1,000 he's going to spend on that army of nieces and nephews. So his starting balance is $12,718. His available income is $2,625. And I'm going to slow down a little because this is a short example, and I'm just going to make it as clear as possible. So how do we get that $2,625? You take his income and you subtract out non-chargeable expenses. Credit cards, loans, your mortgage obviously is a loan, your mortgage, those are going to be paid out from your checking account. So we subtract the mortgage. Well, we'd also generally subtract the credit card payment, and that gives you your chargeable expenses. You take your non-chargeable and your chargeable expenses together, give you your total income, right? So that's his available income. But because we're using this one credit card as a debt eliminator tool, he doesn't have to make this monthly payment anymore. So when you add that back to the $2,271, you end up with $2,625. And how can we do that? We do that because this credit card, as soon as he puts his monthly income down on, his available income down on it, that's that payment. That's that $354 payment. As far as the credit card company is concerned, you just paid it. You paid it in excess, right? So that brings his balance down to $10,093 in the first month. Then he puts his chargeable expenses, right? That was a payment. That $2,271 chargeable expenses back on. And then we got to add the credit card interest. We get the credit card interest by taking that high balance, that low balance, we add them together, and we divide by 2 to get the average. And it's not perfect, but it's the closest we're going to get looking forward on someone's credit card to the monthly interest that'll be calculated. So we take that, we add them together, we divide by 2, then we multiply by that 24.3% interest, but that's annual interest, as if that average of these two is for the whole year. So then you take that, you multiply by the interest, you divide it by 12 to just give us 1 month, right? That comes in at $230 in interest right here, right? So at month 2, he's got his balance down now to $12,594 right here. There's his available income coming off again. Brings his low balance for the month down to $9,965. And again, we add these two. We add them. Sorry, not very clear there. That is supposed to be a plus sign. I'm doing it with my head cocked, so it's coming out like an X. Ugh, just know it's a plus sign. Divide by 2 to get the average. Again, we'll multiply by the 24.3 interest rate. Divide that by 12 for a month. That gives us that $228. Here's his monthly expenses being charged back on his card. So the end of month 3 is $12,468. You can see the rate it's going to increase, and the amount of interest he's going to pay is going to steadily decrease as he's paying down his principal. So when you take that all the way out, it's 49 months, $7,155 in interest. That is a lot. It seems painful. It's way faster than if he just kept making his minimum monthly payments. And also, as an electrician, he's got that extra option. Once he sees this and I show him this, I know what he's going to do. On some random Monday or Tuesday, driving home from work, he's going to answer one of those calls and go, yeah, I can do that job. And a couple 2-3 hours after work, he'll do a small install or a small repair somewhere, pick up a few $100, and he's going to slap that down. Because for 24-year-olds, he's not absolutely disciplined, but he's disciplined enough that he likes to save his money, he likes to invest his money, and he wants to be set up. He wants to grind now so he doesn't have to grind when he's older to make up the difference. I tell all these young guys, which coincidentally are young guys, in the trades, at least the ones I've been dealing with, that I know personally, I tell them, you're either going to grind when you're younger, you're going to forego just the constant partying, spending, going crazy, and save and build something so that when you're 45, 50, and you're really getting tired of working, you can start to enjoy yourself a little. You don't have to grind quite so hard because you started so early saving and investing. Or you're going to do the reverse, and I'm 47, and I tell them, don't do the reverse, because you're going to hit somewhere in your mid-40s, and if you're like me or Jen or even these young guys, because we're in a rural area, they all grew up helping out farmers, stacking hay and picking field rocks all summer. I tell them, start when you're young, grind, because you're going to hit, when you start working 10, 12 years old, because your parents are trying to teach you the value of money, when you're 45, you look back, you're like, I've been working over 30 years already, like I'm tired. So you don't want to save it till now to grind. He's starting young. He is banking money away as much as he can. Like I said, he's already got, maybe I didn't say it, but I thought it. He's got 2.5 times the retirement saved at 24 that I had at 24. And he's a electrical journeyman. I was an engineer at Chrysler working, God, what I work. I got 1 weekend off a month. The hours are irrelevant. They varied. But minimum, 7, 8s, really 10s because of meetings before and after each shift. So he's on it. He's handling it. I mean, he made a small mistake. He fell in love. That's going to cost him some money. And I'm sure it'll bring him joy and happiness and all that other stuff. But we're not here for joy and happiness. We're here for debt relief and increase your cash flow. So this gives him the option. He's going to reduce the interest he's paying every month. So he doesn't have to do side job after side job after side job. So he can actually enjoy his life a little. Which I know what I just said. I tell him grind, but I don't tell him grind and forego everything enjoyable in life. That's ridiculous. No one can do that. Well, not no one. The vast majority of people can't do that. And they shouldn't, because you're going to look back and all you remember is work. That's why I'm no longer at Chrysler. I look back 1 weekend off a month, all I remember is working. My entire 20s and my early 30s, I remember work. I didn't do any of the stuff I grew up enjoying. I didn't get to do any of the stuff I now enjoy doing. It was just a good 10 years, gone, just working. And the money was good, just like he's making good money, but you got to enjoy things, right? And reducing the interest will satisfy that money in his brain. Plus, he'll know, hey, if I go a month and I don't do any side jobs, so what? I'm already maximizing, paying down my credit card. I'm minimizing the interest I'm paying. Well, like I said, this is after all his retirement. He just got his first house. So chances are, he just got his first house. I've been to where he lives now. He doesn't have a barbecue. He has minimal furniture. It's maybe a 5-bedroom, just a little like ranch he's in right now. It's a duplex ranch, just to give you an idea. So it's pretty small, but he's going to need more furniture. He's going to need a barbecue. He's going to need a lawnmower. He's going to need a weed whacker. He's going to need a garden hose. So before you know it, he's not that close to the limit, but before you know it, this is going to skyrocket. And I know he'll take side jobs, but at the same token, while he's enjoying himself, he's got the peace of mind knowing, hey, I put something into place. It took a little bit of upfront effort setting up the pay down strategy. He's already disciplined. That wasn't an issue for him. And he's going to make the most of his money no matter what he chooses to do or no matter how he chooses his time. Now, I can't take it anymore. I'm going to go steal some apple pie. I hope you guys enjoy Turkey Day, wherever you are or whatever you're doing today. I'm Dan with Pay Down Debt Solutions. Remember, always aligned, never alone. Happy Thanksgiving, everybody.